As mentioned, I'm Hilary Thatcher. I am the Director General of Innovation for Indigenous Services Canada, and I'm pleased to welcome to the floor four fabulous panelists who are going to talk to us this morning about, I don't want to call it new tricks, but ways to raise capital and place investments in the Indigenous economy, and I think that's something that's relevant to all of you. The way that we're going to manage this panel discussion, though, is I'll just go through the introductions. Each panelist will have about 5 minutes to give a quick summary of what they're doing and how they're interacting with the Indigenous economy and with Indigenous communities, and some of them with AFIs. And then we'll have a discussion and some questions posed. And I welcome the audience as well. At any time, if there's anybody who has a question, just stand up to one of the mics and we can work to address those questions as well, because we really want to interact with you, and I think this panel can offer a lot of insight and guidance as to how AFIs and how businesses that are in the room can actually work to raise additional capital. So let's start with Derek Ballantine. He's managing partner of New Market Funds. So Derek manages and oversees the business and strategy for Community Forward Fund and the Canadian Cooperative Investment Fund. He has more than 20 years experience leading community housing and development corporations as CEO of Toronto Community Housing and COO of Build Toronto. He's deployed over $500 million in real estate in Canada, and he holds a BA from Carleton University, and he's also the CEO of Nacca Financial. James Hughes is the Executive Director of the McConnell Family Foundation. He's the Executive Lead, of the McConnell Family Foundation, Government and Partner Relations, following 2 years as the Foundation Senior Fellow. He works closely with McConnell's President, Vice President, and program staff to multiply the number and quality of the Foundation's partners. He's the former Deputy Minister of Social Development in the province of New Brunswick, Newfoundland, New Brunswick, both East Coasters, but New Brunswick's just quite distinct from Newfoundland, as we all know, and the former Director General of Quebec's largest organization serving homeless people, the Old Brewery Mission. Ammara Shirazi is a senior consultant with Rally Assets. Ammara is working with Impact Advisory at Rally Assets, leading and advising on select projects. She's a graduate of the Schulich School of Business and has spent a number of years working in impact investment sector, as well as within several of the Canadian financial institutions. Ludivine Ventura is an analyst with the Social Venture Connections, an organization that connects investors with impact funds and ventures. Prior to this role, she was the project manager with Worldwide Hearing, which provides innovative solutions for the delivery of hearing aids to children in vulnerable and underserved communities around the world. She was an impact investing fellow with the McConnell Foundation, where she worked on Indigenous blended financial solutions to increase access to financial capital for Indigenous communities. So why don't we start with Derek? And he will give us a 5-minute summation of the work that he's doing, and we'll work through all of our panelists from Derek over to James, and then we can begin our questions.
We've been around for about 6 years in the current guise of New Market Funds. We describe ourselves as an impact investment platform. If I showed you an organizational structure of what it looks like to try and operate in this space, you might go running away from us because it's complicated in many ways. Our platform is owned 51% by a charity, so we sort of have a value-driven organization that delivers, and it's designed to deliver impact investment products. We operate 4 entities across that platform. 2 of those entities deal with affordable housing and housing affordability. One is an equity fund that invests in permanently affordable rental housing. We have primarily invested in urban areas through that fund. We are looking for larger markets. We work with community partners in the delivery of that housing, so we are only equity investors into those projects. Of the sort of 800 projects that total about 800 units of housing, there are about 150 which you could describe as working with Indigenous organizations and building housing with them and supporting their capacity. The second one is an actual housing development corporation, and we raised, it's a not-for-profit development corporation, but we raised private capital to help build and bring equity to the project. So our working capital is driven from investors. And that corporation presently has about 1,600 units of housing under development, about 300 units of which will be operated by Indigenous housing groups. So again, sort of a small part of what the overall is. The last two funds that we operate are loan funds or community loan funds. One targets access to capital for not-for-profits and charities. The second one is not a fund that we built and designed, but one which we are managing, which does the same for cooperative enterprise. And it's a relatively new and relatively recent addition to our platform. Across the four entities across our platform, we operate about 65 million in capital. So we are not a big investment firm. We are relatively small, and our interest is really the production of social impact through the investments that we make and through the capital that we raise. We've raised capital from about 70 investors across the platform. I say that because, you know, one of the realities to date, when you're working in this sort of a higher impact and more social impact space and trying to raise capital, is it does not come in large quantums for a couple of reasons. There probably is not a sufficiently, you know, the market, the investor market into social impact has largely been driven in this country by foundations. And there are some natural limitations and some natural sort of barriers to foundations being able to fully capitalize the social impact sector. They've been, you know, without those foundations, there would not really be a social impact investment space in this country. So full credit to the leadership that they have shown, but you know, it is impossible to expect them to be the large capital investors that really are going to move the needle on a large number of these issues. They hold significant capital, but you know, the big capital in this country is not held in foundations, it's held elsewhere. And that capital has not really found its way into the space. We do have some financial institutions that are sort of dipping their toe into the waters and thinking, what does social impact look like? And what does it look like from an investor perspective? Where we have sort of encountered the Indigenous economy is largely through the one of the loan funds that we operate, largely because we have a significant amount of flexibility through that. We broadly invest in not-for-profit enterprise and other qualified sort of entities, First Nations being in that space. And as new market, as the fund entity or the fund manager, we have for about 3 years been trying to find a way into how we would support and how we could channel more capital into the Indigenous economy. It's complicated, obviously, because we are not, our organization is not born of Indigenous communities. We are sitting outside those communities, so it's not, we are not front-facing and we do not see the transactions, and it really should not be our direct role in the movement of the capital. But we have thought about how do we generate capital and how do we place that capital or create a path for that capital into Indigenous community. In the Community Loan Fund, which has a relatively small capital base of about 12 million, it has cycled about 1.5 times that capital over the last 5 years. We have about now 30% of that capital invested in what you might call the Indigenous economy, or in transactions which were brought to us and are governed by Indigenous communities. And we've done a couple of things. In part, one was to test a couple of concepts. One, we did work in partnership with the Ulnuweg Development Corporation, who would be familiar to many of you, and AFI, because we wanted to figure out how we could underwrite an AFI as a way of then having our capital deployed by that AFI more directly. That it was not, we were neither of those communities nor understood those communities nor faced those transactions, but if we could underwrite the AFI, then we could provide capital to the AFI and let the AFI transact. And we have done that, in fact, with Ulnuweg, and we're sort of in the first year of what will hopefully be a long and growing relationship. We've also transacted directly on 4 different deals where they were brought to us through an AFI, and we did bring the capital into it, but we did it in a way which gave us the assurance that where the capital was going was sort of aligned with community value and community interest. Obviously we are cautious in the way in which we might come to disrupt community with the capital and make sure it has to be aligned with both community value and the sort of economic plan that exists for those communities. This has led us to sort of where we sit today, which I don't want to talk too much about because we're in the initial stages, but we do see the huge need for capital. We see the incredibly large opportunity for placement of capital, particularly through AFIs in Indigenous communities, and are now working in conjunction with a small group of AFIs on how we might broaden the capital raise and be able to channel it into those communities. So a little bit of the arc of our story of how we have interacted with the economy.
Hi, I'm Ludivine. I work for SVX. It's a social venture connection. We are also an impact investing platform. We are an intermediary. We connect social ventures and social impact funds with impact investors. So we're really in the middle. With the ventures, we help them to become investment ready. And we also provide a lot of advisory support. And on the investor side, we help them find good impact investment on the platform. Our impact investors we have 900 people, investors on the platform right now. There are return first or impact first investors. So we cover like a wide spectrum. So you have like some investors that are really looking to have an impact, and they can accept concessionary return for that. Others are return first and they want to see some impact as well. So we work with both. On the advisory side, we are trying to see, okay, what are the gaps and how do you fill this gap with a new fund? So a bit similar to what Derek was talking about. We are currently working with Tides Canada. So Tides Canada set up an accelerator program across the 3 territories to work with entrepreneurs at the beginning of their journey and accelerate their growth. And they hired us to see, okay, could we design a fund to provide them with capital once they are out of the program? So in this design process, we had like a workshop in Whitehorse 1 month ago with a couple of AFIs, some government representatives, some entrepreneurs, and people from the communities to really identify the gaps and the solution. And the clear thing that appeared was like active equity was needed, and that's what AFIs were doing already. So the fund that we will create will not replicate the work. It's more, how can we collaborate to create something that will help move the needle forward? So that's what we do. Thank you.
Hi, I'm Ammara from Raleigh Assets. So previously we were known as Purpose Capital, and that organization was around for about 6 years. At that point we worked with both sides of the market, so we helped investors that were interested in impact investing create their strategies and do a bit of education about what is impact investing and what does the market look like, what are some of the growth and trends. And then we also worked with social enterprises that were looking to become investment ready, so help them with their business models and refine their pitches for investors. Recently in the fall, we had a strategy shift and started to focus more on investors and working with different investor types, which also led to a rebrand and change in our name. So now in terms of what Raleigh Assets does, we focus solely on investors. So that has been a lot of our community and philanthropic foundations that we have worked with over the years. But we are also starting to work with a lot more family offices, high net worth individuals, and some corporates that are interested in both impact and responsible investing. So our services cut across private and public markets. In terms of the service lines, we do still do the education and help them create their strategies, but we've also expanded that to help them with the implementation side. One of the gaps we saw in the market is when we help clients develop their strategies, when it came time to do the implementation, a lot of advisors we're not familiar with impact investing, and due to the private nature of the market, we're not aware of the deals and transactions that were taking place. So now we will also be helping clients conduct diligence as well as find deals and help them with their impact measurement frameworks. In addition to that, we also help do a lot of market and ecosystem building through research and publications. Yeah, so that's us.
Good morning, everyone. I'm also delighted to be here with the panel. Bonjour aux amis francophones dans la salle. And want to acknowledge that we're here on Algonquin lands, and delighted that we have their welcome to be able to talk about such important issues as this one. So I'm with the Montreal-based McConnell Foundation. The McConnell Foundation is a national foundation that has been around a fairly long time. It's been around since the early 1940s, actually started in the late 1930s. And its journey to be part of the Indigenous economy, it took about 60 years. And we started to grant into Indigenous organizations in early 2000s, and have been supportive of Cindy Blackstock's work and the work of others since then. I would say our work accelerated since the beginning of the TRC work as the country has awakened to the need to act and support and intervene and be in service of the Indigenous economy in a disproportionate way. And so I'd like to think that the McConnell Foundation is very much part of that and is excited to do more and more in the future, to be perfectly frank. We are interested in a whole variety of areas, from mental health to food security, the city space, and other areas, but the Indigenous space, the Indigenous initiatives are our single largest area of interest, and we take a social innovation lens on that, so trying to bring to each of those spaces, including this one, the idea that we need to think systemically and not just programmatically. How can we change the rules of the game while and use our power, as I think was talked about in the Indigenomics presentation? I thought Caroline's presentation was great, to think in systemic ways. So we as a foundation, we take the position that the reconciliation economy is really fundamental to improving outcomes and improving performance right across First Nations communities, both on reserve and off reserve. And we think of that as in three parts, the reconciliation economy. So part one is people, making sure that any granting or investing that we do is thinking about people first. That's thinking about planet and the environmental and sustainability of any of those types of investments. And third is profit, that in fact we are contributing to the generation of wealth. So we want to do all those three things, and in many ways that is what impact investing is. And we are, as Derek alluded to, perhaps one of the foundations that has been around to start the impact investing social finance movement in this country, which I think is so promising for all of us. We as a foundation, we're blessed to have very, very limited restrictions on what we can do. We have a very large endowment. We're one of the larger foundations in the country. And our only obligation by law is to grant 3.5% of that fund every year. We're also, and so that's really on the income statement or budget side of the equation. On the balance sheet side, we invest about 11% of our endowment in impact investments. And we're just above our target now in terms of those investments, so that they're almost $70 million in investments. So we do both things. We grant and we invest. And we find that in terms of generating wealth and being a good impact investor, in fact, we have to do both things at the same time. And one of the best examples of that is our friends at ABSCAN. And we've been a big supporter of ASOCA and ABSCAN for many years now, and have found that it was really important to support them with grant funding to start with, so they can do their planning, that they can engage with other communities across Quebec in terms of socializing their model of mortgage finance. And then we're also an investor in their loan fund, so to create the fund and the money necessary to then loan out to community members who want to own their own homes. They do other things than that, but that's how we come at our issues to a large degree, is with a view to both granting and investing to try to move the needle forward. We've supported Raven Capital, we've supported Aki Energy, which is doing conversions into geothermal in Manitoba. Those investments, I think, are going to pay off big time for individual families to lower their bills. It also helps Manitoba Hydro. So those are the kinds of investments that we're interested in. I think there's huge opportunities going forward, and I look forward to talking about some of those more specifically in the exchange.
And we're hearing more and more investors interested in understanding how reconciliation plays a role in making investments and what their obligations may be, and how that is an underlying and underpinning interest in being more inclusive with Indigenous communities, but also supporting Indigenous endeavors and aspirations. So how have your firms, and maybe we can just start with you, James, initially, how do you define reconciliation and use reconciliation as a method to gauge investments and opportunities for McConnell Foundation? But also, how can AFIs and Indigenous organizations, communities, use reconciliation in an advantageous way to attract investments? Can reconciliation be used as a way to attract more investors to come to their communities?
So a really interesting question. So I mean, in terms of our view, reconciliation is a Canadian movement. It's not just a movement for Indigenous people. It's a movement for non-Indigenous people, and we have to think about it in terms of flipping the constructs of the past, where everything was done to, everything was done for. And reconciliation to us is about moving to real equality of opportunity, access to finance, access to wealth, access to jobs in an equal way, free of the kind of racism that we've seen in the past, free of the kind of colonialism we have in the past. And philanthropy is just, frankly, starting to do that. We have no doubt been part of that colonial construct in how we have worked in the past. And so to flip that, we have to absolutely think first to be in service of, to listen deeply, to be much more patient and much more conscious of the privilege that we have. But I can say that we are sincerely, and we think so hard about this, sincerely about trying to use our privilege to be in service of the movement towards that form of equality that I think we all yearn for. So just in terms of, I think that takes time. I think the country is still learning. I think the country is still moving toward, I think it's going to take some more time. I think we still see those barriers in place, and we think that is true in terms of investment as well. But we have to talk about it. We have to pull other foundations in. I think at the end of the day, other private sector investors in too, so that they start to understand the challenges that we've faced and are trying to overcome, and the opportunities that are here. I think the Indigenomics work, talking about the opportunities here and the powerful opportunities for Indigenous communities, but the powerful opportunities for the whole country. This is all of our opportunity.
Sure. So for us and our clients at Rally, reconciliation is a process and a goal that's on top of mind for a lot of our investors. And we're seeing interest, especially from some of our foundation clients, in investments of funds that are led by Indigenous people, such as Raven, as well as social enterprises that are Indigenous-led. And so that's on some of the private markets work that we're doing, but we're also helping them understand how within the public market, so as they're making investments, trying to understand how companies are taking Indigenous rights or the economy or the people into consideration. And so looking to see if organizations are following the UN Declaration for Rights of Indigenous People. And there was a study shared at the Share and Ottawa event that happened here, or happened in Ottawa about a week or so ago, about a study with the Dakota Pipeline that showed that over a 2-year period from I think August 2016 till September 2018, the parent company of the Dakota Pipeline, their share price dropped by about 20% at a time when the S&P went up by about 35%. So a lot of that, and to caveat that it's not directly related to the backlash against the pipeline, but there was a lot of it did come from investors that did not agree with some of the actions of the pipeline and organizations that supported it. So we are seeing movements within the public markets as well of people that are taking a stand and investing alongside what their values are and doing that across both their public and private markets investments.
Thanks. Do you have anything else to add, Ludivine?
Yeah, just quickly, I think for us as a platform, it's to make sure that we integrate more and more opportunities that come from the Indigenous economy sector. And from the investor side, how do you bring the knowledge? Because a lot of time it's people want to do something, but they don't know about it. So how do you make sure that there is a knowledge transfer?
No disagreement with what's been said. I think to your question of, you have AFIs with a need for capital and sort of obviously, let's start with the premise here, investable opportunities. And you have capital sitting at distance. And the question is, how do you build a path back through that? And yes, there are motivated investors, I think without doubt. There is, I think, to James' point, to the degree that reconciliation is becoming a Canadian, or being sort of embraced as a Canadian responsibility, there's an increasing understanding that capital can have an impact and will have a result in community in certain economic circumstances. But I think that path is often incredibly difficult because it's not a path that's been trodden frequently. And investors, with all due respect to investors, and believe me, I fully respect them because our existence depends on them, what they do when faced with choice of complexity or choice of simplicity, choice of risk or choice of path of lowest risk, will tend towards low resistance, low risk. We're probably all like that in real life. When we make our own personal decisions, we're probably not different from that. So I think part of it is developing instruments that demystify and de-risk that kind of path through from deal to capital. And I think it's important to build, capital moves through intermediaries. It doesn't move directly from where the source of capital is to the deal, or at least it's rare for it to do it in that fashion. And I think you do need to start building intermediaries that are focused and targeted and interested in this space and will, in some ways, de-risk that investment for capital to find its way there. And then, it's about moving the scale of capital, which is critically important because we can move small amounts of capital and it has an impact, but really it's about moving large amounts of capital through that pipeline.
The growing rate of impact investing, you're all involved in it. A number of AFIs and a number of organizations in the room have been involved in impact investing, and it's still fairly new in Canada. I'm going to quote, Rally Assets estimates that impact investing has grown to over 1.3 trillion worldwide. At the Mars Social Finance Forum in November, a lot of great discussion about Canada's newness into this space and the big opportunity for Canada to actually have a fairly defining role in the social finance space. 1.3 trillion still is a fairly small number in relation to the larger amount of wealth that's being invested worldwide. I'm wondering, do you have some suggestions around the types of steps that could be taken to help speed up that process in Canada? Some ideas that could help accelerate impact investing and social finance in this country? And Ammara, I'm going to start with you.
Sure, thank you. So I think there's still a big education component that goes along with this. A lot of folks within mainstream are still not aware of what is impact investing, or there are still a lot of myths about impact investing, meaning you're taking a concessionary return. And there's, those are some of the challenges that we face when we deal with a lot of our clients or foundation boards or investment committees. They think that they'll have to, in order to get some of that impact, take concessionary returns. And there's a whole spectrum. You can make concessionary as well as market rate returns depending on type of impact and the type of investment you're doing and the stage that you're investing in. So I think that's one of the education pieces around working with different types of investors. And then there's also an education piece with financial advisors. A lot of mainstream financial advisors have started to talk about responsible or integrating the environment, social, and governance lens within your investments. But that's still within the public market side and are not looking at or unaware of how to look at impact within private markets. And a lot of that could go to some of the structural barriers that are out of their control in terms of if their bank at RBC is able to offer some of these products or get it onto their platform. So I think that's the two pieces within education, is on the investor and the advisor side. I touched on that deal flow is private, especially within the private impact investment space. It's you can't go to a public stock exchange and see the list of everything that's out there. There are funds and social enterprises that are operating across the country within the Indigenous economy and otherwise, so it can be hard to find some of those deals, and because they're private, they open and close their funding rounds at different times. There's no kind of standard. Everybody starts raising money in January and closes off at the end of August. So one of the things that Rally has tried to do, at least for funds, we've created a platform called Open Impact in conjunction with the Leachin Institute at the University at the Leachin Institute at Rotman School of Management at the University of Toronto, which is a listing of funds across Canada that are operating in different sectors. Some of them have very local focus, to invest in certain businesses in BC, and then there are ones that operate across Canada as a way to help investors find some of those deals. And I think one of the other kind of gaps or opportunities in the market is retail investors. There are a lot of products that are out there right now for accredited or institutional investors, but retail investors don't have access to a lot of the impact investment products, either through their regular investment accounts or even through some of the registers, your RSPs, your tax-free savings accounts.
You stole the last one. But yeah, the regulation right now for retail investors is very strict. It's to protect them, of course, but it's a lot of people right now our generation is very aware that they need to protect the planet and the people and things like that, but how do you accept that? You need to mobilize your own capital. But when you go to your bank and you ask them, okay, I want to place some of my portfolio in something that is good for the environment, they don't know what to offer to you because you're too small or they don't have access to any product. So it's a lot of pushing against that, and so regulation would be a good thing, yeah.
Well, in the retail sector, the big issue is liquidity, because an accredited investor can invest in something which is essentially an illiquid investment with relative risk attached to it. Retail investors, by security legislation, are largely confined to having to invest in liquid investments. That means they're cashable. You can convert them to cash on short notice. And the impact space has not evolved to a point where it has that kind of product on the shelf. You can't take your registered retirement savings plan and say, oh, I want to go buy that impact fund and then cash it 2 months later because you need the cash. That product doesn't exist at this point. And so I think that's one of the barriers that has to be overcome, for sure, of finding different products and finding ways into the market in that way.
I think there's capital that's wanting to come to bear. I think there's a lack of intermediaries right now in the space, and I think there's a lack of deal flow. You need all three things. You need your capital, you need your intermediaries, and you need your deals. And all three things have to move at one speed. And just one example where McConnell and other foundations are trying to be helpful in this area is a product that we have negotiated with in Quebec with the Caisse d'économie sociale. It's a credit union, Caisse Desjardins unit, and we have done a deal with them and several other foundations where we will guarantee up to 75% of their loans to social enterprises in Quebec. So the problem also in terms of making financing available for social enterprise is affordability. So the rates that an RBC or a Desjardins will give to a social enterprise, seeking accounts receivable support or inventory types of financing is in the 6, 7, 8%, and that's very hard to pay for. So the guarantee actually that we can offer actually reduces that rate that the bank can offer, and therefore makes the capital available. So it's a question, wouldn't Nacca wouldn't be beautifully situated to start to think about funding for social enterprise that can bring impact investment dollars in with philanthropic foundation guarantees? Just to start, I don't think that's an answer to everything, but just to start to demonstrate a template that can show that these are investments that are very much worth making. I mean, just to mention Abscan again, their default rate is 0. Their arrears are 0. The risk is like nothing. And we've got to get that message out through these kinds of examples.
Thanks. Before I ask any other questions, I'm wondering, I haven't seen anybody stand up to the mic, but are there any questions from the floor around some of the social financing impact investments? Are any of your organizations actively involved and have some comments you want to make? By all means, don't hesitate to stand up to those mics.
I think this is a fantastic area, social impact investing, tremendous potential. And I first came across social impact investing in Australia, Social Ventures Australia 10 years ago. Canada we weren't doing it yet. It was Prime Minister Paul Martin actually formed a commission in British Columbia, then one in Ontario in 09-10, and then it started to pick up. So about 5 years ago, we asked communities, and this was more on the labor market employment side, what do you think about social impact investing? And sort of 1/3 were afraid of it. They felt that it was the way the federal government was going to get out of their fiduciary responsibility, because then you'd be making your own money, and so you could get out of your childcare, so et cetera, et cetera. The bottom third didn't know about it, had no capacity, were didn't know how they would do it. There was interest. The middle third were actually doing it, but they didn't know it was called social investing. They didn't know it was called social impact. So there were friendship centers that have hotels, and they sell trinkets, and they have a restaurant, and they use their revenues to fund up other things. There was groups in Winnipeg that had a relationship with the Brick to recycle mattresses. And when I said, did you ever think about maybe doing this, what was it, a Mother's Earth recycling or something? Couldn't you think about doing that nationally, as a social finance investment? So the issue is really, the communities basically said, if the federal government and organizations really want to do this, we don't have the capacity, we don't have the knowledge, we don't have the tools, and quite frankly, we don't have the wherewithal to suffer like a $25,000 loss and carry that forward 1 year to the next. So we really need better mechanisms. The feds should put in mechanisms. Perhaps you folks have ideas in terms of how could we actually really support and accelerate, and let's say double or triple social impact investing, and really bring these communities so that they're obviously everything from the capital that you talk about mobilizing, but the real support mechanisms, the enablement mechanisms to bring and engage communities so we could amplify this. Appreciate your thoughts and ideas on that.
Maybe more directly to your question. In fact, the federal government is on the verge of potentially, I say potentially, enabling some of that to happen, because there was in the fall economic update 2 fairly significant announcements in this space. One is a commitment to the rollout of a 10-year social finance fund of $755 million, so not small change, not nearly enough capital to address sort of what it could be addressing, but it's a start, and it potentially is capital that could then leverage other capital and bring other institutional capital to play in the space. So, big announcement. The other one is $50 million to build capacity among organizations and among intermediaries to do just what you were talking about how to bring scale, how to bring investable product to market and those sorts of things. I say we're potentially on the verge because we don't yet know how it will be distributed or quite how it will roll out, but I think in those two instruments, there is a huge potential about how more capital will flow and more capacity will be developed in being able to deploy that capital in a variety of places.
I think there is, I think it was sort of mentioned that in many ways, Nacca and the AFIs and many of the businesses they support are already in the impact area. They're already social enterprises, and I think, as you said, they just don't actually use that label yet. But it's a really exciting space. Some of the award winners last night, I think, are social enterprises. So it may be a matter of packaging, it may be a matter of thinking about it as a portfolio, maybe even creating an award for it. I mean, there is some science around social enterprise, what it is, what an impact investment needs to actually qualify as impact. There's objective measures of this. But this is not the hardest thing in the world to do. And once it's done, I think, and once it's objectively qualified as impact ready, then some dollars can flow. But I think Nacca can play a really interesting leadership role in that regard, start to organize itself. Maybe there's an impact award, who knows? So I think that's just one thought. The other is the housing space. Housing almost by its very nature is in the impact space. And the housing needs across this country are absolutely massive. And to get organized in terms of the skills development, the trades development, and so on, to have a housing portfolio of impact investments will also draw capital in, I think, in a big way. So two thoughts for consideration.
So our panel is just about out of time, so I see 4 folks with questions. So why don't we take the questions and then we'll have a reflective and final comments.
Yeah, those great questions, and I'll maybe the last 2 are kind of I could maybe say something about, but so in Regina, maybe some people know the Mother Teresa School Social Impact Bond. If you don't, it's a great story. It's not a big investment, but it was one of the fertilizer companies. I can't remember which one right now, but it was it invested $1 million in the Mother Teresa Secondary School, and the contract was that the provincial government would repay the potash company a modest return on that investment in the event that Mother Teresa School's graduation rates went up. So the school had this $1 million to try to surround kids at risk with more supports than they had before, summer programming and other types of interventions, and the rates started to go up. And so as I say, the return was modest. It was a 3-way contract, a classic social impact bond model, and it's a little known example of how that mechanism can actually help directly on the ground in an urban setting with kids at risk. So that kind of addresses the youth question as well. How can we support youth? I'm a big fan of social impact types of investments of those kinds. They're really hard to do. We don't have a lot of them in the country because there's lawyers involved, and what are the metrics we're going to use and so on. But we need to get to those issues of outcomes. We need to have that conversation in the impact space. We need to have better data, better evidence, and a little more bravery to do these things. The United States and the United Kingdom have done infinitely more of these types of transactions than we have. And I think the Indigenous space is just a fantastic space to be potentially trying some of these at much greater levels of investment and much greater numbers of individuals helped.
Thanks, and I would just add to Jocelyn and Julian's question. The federal government is participating in some social impact bonds and certainly investigating opportunities to use these mechanisms on an impact basis. So coming up with and working with communities and organizations on that. So we're new to the space as well, but it is something that we're certainly looking at and seeing how we can play a role.
Can I just in case I didn't say it, those are in Mother Teresa School. Almost 100% of the kids are inner city Indigenous kids. So that's an Indigenous project. Just, I'm not sure if that was clear, but I just wanted to say that.
Did you have something, Ammara?
Yep, so thank you for the questions. I think I'll address the first two because they dealt a lot with investors and types of products that might come in front of them. So at Rally, we're working with a whole host of different investors that have different objectives in terms of return. So we are working with some investors that are looking for below market, so their 2 or 3% is their ideal sweet spot because they'd like to have greater impact in any of the investments that they're making. And then on the flip side, we also have folks that are looking for more traditional market rate returns through some of their investments. And as a result of that, we're seeing different types of products in the market as well. We're seeing products that are having that deeper impact, but seeking concessionary capital from, concessionary returns to investors. And so I think it's just about seeing what type of products are in the market and how that fits with our clients. We are always on the lookout for different types of products, whether they're funds or direct deals to social enterprises, just to solicit to our clients and see what may be of interest to them. So if you have anything, please do come let us know.
Thanks.
I think we hear a lot about blended finance right now in impact investing. So it's how do you put together different capitals, like the one that you just mentioned, together to address like the need on the market, like the gaps that you see. So sometimes you start with, like as Jim mentions before, a guarantee, a first loss capital that will allow others that are more return first investors to bring their own capital. So a simple mechanism like that can go a long way. You have all other mechanisms as well. You also can have a mix of grants and investments. Corporations have a CSR program. There are more and more. They want to do a lot of granting in this space just because, well, they want to look good. And so, you can get some grants from them to do the capacity building and then develop something on the side. So that's just one of the options. And I think SIBs are a great mechanism. And we see a couple of them in Canada and more, and I'm sure we're going to see more. Yeah.
So maybe a last thought. So the questions touched on, a couple of areas, and I think we need to think about capital as being differentiated for the use it has and how it might be absorbed. I think of it in 3 parts. So there is developmental capital, which no doubt requires support. When you're starting an enterprise up, you need some support to be de-risked. The federal government has done that in other areas of the capital markets. Venture capital in this country that market did not just develop overnight because there were a bunch of venture investors who wanted to do it. They were heavily underwritten by federal backstops, and that's how that market developed. And I think in some parts of the social finance segment, that's a federal role, and that's how you sort of move capital in and grow capital around that. Development capital is the high-risk capital that's going in, which may or may not result in the outcomes you're looking for. There's growth capital. How do you grow enterprise that exist, that are stable, have a proven track record, but need access to capital? And that growth represents some risk, but it's based on a proven business model and a proven sort of enterprise. And then there is capital for more mature and stable organizations. And if you think about it, the cost of that capital should descend along that arc. And you should be able to raise it with less and less backstop support. But in all segments, you probably need some of that support, particularly initially, to open up those markets and demonstrate what the real risk is in those markets as opposed to the perceived risks.
And with that, I would like to thank this fabulous panel, the wonderful questions from the audience, and Nacca for having us. So thank you all.
Thank you all.